Okay, let's look at section 25.6. Now, 25.6 is not very common. So the idea is it applies usually to situations when you have people like foreigner that they are leaving the country, then only 25.6 will apply. Okay, so I will run through first the law and I'll tell you what does it mean. Then we'll go through an example. Then you can see how does it work. Okay. Okay. To have 25.6 to apply, the Director General must satisfy 3 conditions. Okay. What are the 3 conditions? Number 1. The employee has left or will be leaving Malaysia in the basis year for the year of assessment to which the relevant period relates. Now in bracket they say then you call that as the relevant year. Relevant year is the year you're leaving the country. And then carry on. You will not be resident for the basis year for the following year. So what is condition A? Now it looks like that. So I'm going to use this to illustrate. Now, it's like that. Let's say this is 2019, 2020. So you are in the country all the way until here, and then the employee left. So 2019 is the relevant year. Now, and when you've left, now the law says 2020, the following year, you will be a non-resident. Now, we get an understanding this will apply to cases like you leave the country and you don't come back. Foreigner return and not coming back. So you become a non-resident in the subsequent year. Okay, that's the first condition. Now, second condition is quite simple. You will have no pension derived from Malaysia that will be receivable in that following year. Now, meaning 2020, you're not going to get pension. I just write here, no pension. It's quite clear. You don't have pension in the question. Okay. Now, the third one is this. The employee's employment will cease to be derived from Malaysia on expiration of a period of leave following the departure. Okay, what exactly is the third issue is like this. Now, I think most of you will know what because you're all working. Now, let's say my contract requires 3 months notice to resign. Okay? My contract requires 3 months notice to resign. Assuming if today is end of the month or first of the month, let's say 1st of March 2020 if I want to resign, if I tender my letter on 1st of March 2020, I must work until when? You all must know one because you all sure will tender resignation one. Until when? 31st of May, right? See you all know. Until 31st of May, 3 months, no? So you say, okay, now I tender 31st of May, last day. Now, but you see, over the year, you've been such a hardworking employee and then you've been accumulating your leave. So you've got 3-month leave now, which technically you can apply leave and your boss got to pay you, right? Now, so when you have a 3-month leave, you realize what will happen is, on the 1st of March, you throw in the letter and tell your boss, I want to resign. And you say, I give you 3-month notice. Then you also at the same time throw in a leave application. I will apply leave from today for 3 months. So effectively what happens is you will stop working already. I mean, assuming he allowed that. Okay, so that means you will stop working on 1st of March. You don't have to go to office anymore. But your boss will continue to pay you another 3 months because of the leave. Now, that's exactly what the law trying to say. That you still enjoy leave But once the leave expire, your employment income finish. Okay, so it's like this. That's your leave pay. That once you left the country, you are still entitled to leave pay. But the moment when your leave expires, finished, that's it. Here, your employment has ended. Okay, so this will be the situation that Section 25(6) is talking about. Okay, so now we know the condition of 25(6). The next thing we're going to ask is, so what? So what? Okay, so what do you want to tell? Now, what we want to tell here is, how do you assess the employment income? Because normally employment income is assessed on receipt basis. That's what Section 25(1) is saying. But 25(6) come in and say that when you have this situation in 25(6), the law says this, that whatever income receivable for the relevant year, the year you're leaving is called relevant year, or for the year following the relevant year, that means the next year. So you say whatever you're entitled to receive for 2019 as well as 2020, the law say what? Treated as deemed to have been received in the relevant period. Meaning 25(6) will actually treat all these things as deemed received in 2019. And because our employment income is taxed on receipt basis, if it's deemed received, then you must tax it. Then you will take all the leave pay of 2019 and 2020 and tax it in 2019. But this rule is special because there's an unless after that. Meaning it has a choice, unless what? Now, unless the employee in making his return of income for the relevant year makes a written request. Unless the employee makes a written request to Director General that this subsection shall not apply. You have a choice to write in to the Director General and say, I don't want to apply this section. So what happens if you say you don't apply? If you don't apply, then you follow the normal rule. So when you follow the normal rule, you follow receipt basis, then you ask yourself, okay, so when did I receive the leave pay? Now, even though you're entitled to leave pay, your boss is probably going to pay you for the respective month. So the leave pay for November, pay in November. December, pay in December. Then January, pay in January. So if January 2020, because you received in 2020, you should tax it in 2020 and not 2019. Now, that's what the law says. So please turn to page 71. Okay, the first two illustration, it's for 25(1). It's very straightforward. Can we just quickly just do this? Then I'll let you try the one with 25(6). It says that George is employed as a research scientist for Tech Lab, and he's paid a monthly salary of 15,000 ringgit. And for the entire year of 2018, he received only 10 months salary. Salary for November and December 2018 will be paid in January 2019. And George also received a bonus of 45,000 in February 2018. And that's the bonus for 2017. So what happened here is in YA18. Now you gotta ask yourself what's the salary and what's the bonus that you're gonna assess. Now question is very simple. How much did you receive? Now in 2018 you received only 10 months. That's it, 10 months. So 100 50,000. But at the same time, you also receive 45,000 of bonus. Now, no doubt they say the bonus is meant for 2017. It doesn't matter. Because we tax on receipt basis. Okay, now illustration 2. Vincent is employed with a monthly salary of 6,000, and he's in 2018 he's been received 84,000, and that's 12 months salary of 2018, 2-month advancement from 2019, and in 2019 his salary for December will only be paid in January 2020. So what is the salary amount that you assess in 2018 and 2019? I think that's also quite straightforward, right? Now, 2018 is so clear that he received 84. So 84, you receive 84, so you tax 84. Now, but you got to be very clear that the 84 is the 12-month salary of 2018 plus 2 months salary from 2019. So then what's the amount that you assess in 2019? Now, then in that case, 2019, you take out the 2 months already because you assess already. You cannot repeat. You repeat, then you double count already. Now, plus supposedly another 10 months in 2019. But then when you read the description, it says that the December one will only be paid in January. So in that case, 9 months only. Because another 1 month goes to next year. So your salary will be 54K. It's very straightforward, right? So that's receipt basis. That's section 25(1). Now, but that's not what we are discussing. So we are discussing 25(6). So I need you to try this example here concerning 25(6). Okay. Alright, short example where it says Laura is employed by TTK at the monthly salary of 4,000. She's entitled to 6 months of leave, and she resigned and will leave country permanently on 1st October 2017. Now that statement gives us a glimpse of section 25(6). 2017, resigned, leaving the country permanently, not coming back. So you will become a non-resident. Then the example says he is entitled to 6 months of leave. No pension being mentioned. So it's all the condition of 25(6). Now, she will be paid in the respective month, her leave pay, up to March 2018. Then the employment will cease permanently. Now, that's exactly what 25(6) is saying. Now, when you have 25(6), right, then you must ask yourself, is 25(6) applicable or not? Now, if 25(6) is not applicable, you have to do something. What must you do? You have to write in and tell the Director General, don't apply 25(6). That's why in order for 25(6) to be not applicable, that means Laura has submitted a written request to the Director General. You must have submitted a written request to tell DG, don't want 25(6). Now, if you don't do anything, right, then 25(6) will apply. So when 25(6) apply and don't apply, then it affects the way we assess her income. Now, I would like you to try that. Now, I need you to fill in the amount if 25(6) is applicable, and if it's not applicable, how much will the amount be? Okay, so please read back. Alright, if you're not sure, remember I've explained to you the example here. I've told you about when there's 25(6) and not 25(6), what is the impact, okay? So if you can put in the numbers, means you actually have understood how to apply it. Okay, so I'll give you a few minutes just to run through the figure, and then we'll discuss the answer after this. Okay, so when 25(6) is applicable, that means the deeming provision apply. So whatever income that you're supposed to get from the day you leave the country will all be deemed received in the year you leave the country. Okay, the salary will actually be for 9 months, so that's 36,000. Now, the leave pay is 24. It will all be deemed received in 2017. So 2018, nothing. Kosong. Okay, if Laura has written to request the Director General don't apply 25(6), the effect will be like that. Now the salary won't change, but you only tax according to what you receive. And because the example say that the leave pay will be paid in the respective month, meaning in 2017 you get the 3 months, so you get 12,000. 2018 you get another 3 months, you get 12,000. So that's how figures will become. Now you might ask, like, actually which one is better? Is the first one better or the second one is better? Now some will say second one looks better because by splitting the income to the next year, you pay less tax now, then you pay the tax later on, so you actually delay your tax liability. Now some will see that, but actually you must think carefully. In 2018, you already become a non-resident. So if 2018 you become a non-resident, then the question is, if you use the first option, you are paying tax as a resident in 2017, your tax might be lower. But if you are going for the second option, right, even though you delay the income to 2018, but you must understand, because as a non-resident, you'll be paying tax at 28%. So it may not be that good, right? Okay, so that's basically what 25(6) is all about. Follow? Now, so this concerns with the basis of how we assess employment income. Now, in this F6 level or TX level, this thing comes out once a blue moon. It's not a very important thing, okay? But at least it appears in the exam. But when it comes to the higher level, like the advanced tax, usually they don't test this type of thing anymore. So usually I don't discuss all that when it comes to a higher level, okay? Now, so that is 25(6). We are done, okay?